Welcome, welcome, welcome. It's time for Trader Tuesday. What's up, Graham? Hello, Rosie. Martin, how you doing? My man, Eric. Hussein, Sasikant, Paolo, Ivan, Alex, Thomas, Trevor, Robin. What's up? All right, so format for you regulars is the same. For anyone who doesn't know, we'll do pull up your Zoom window, and then one feature you may not know about Zoom is there's a Q&A box if that's enabled by the host. So we have that enabled. So hit that Q&A button. This is your time to get mentoring from me. Put your questions in, first come, first serve basis. We usually do not get to all the questions in this half-hour session because you guys are so awesome and ask so many good ones. And then for general banter, or if I ask you a follow-up question or whatever, please use the chat. It's a good idea to have your chat set to talk to everyone rather than just hosts and panelists, which is just me, like this. All right, let's hop into the Q&A. We had a good time on the intensive, didn't we? I'm sure some of you here were in the intensive. It was a cool week. It was a week where it was not the best narratives. We went and found some good narratives, crude oil, soybeans, and put on some good trades in those. Crude oil was more challenging, took more attempts to work into. Soybeans was easy, one and done. And then a lot of scalping in the S&P. So we had a good time. I hope you guys had a good time. I know you guys had a good time. I've seen a lot of the feedback, and happy to get some negative feedback. That hasn't happened yet, but we're certainly open to that and open to seeing how we can do something with the intensive better for you guys next time. So let's get to the questions. Christopher says, when developing your narrative, probably most specific to index futures, I assume the focus is on looking at what has occurred during RTH. Is that largely because there's different players during Globex that have different objectives, whereas RTH aligns with significant volume and the trading hours for the underlying asset for the index future are derivative of? Whew. Also, what time do you consider for RTH? Obvious open at 9:30 Eastern. I see some people use anywhere from 4 to 5 p.m. for the close. Why the difference fundamentally? All right, Christopher. So I'm not so sure it's hugely different players anymore. I think that some of the biggest and best trading houses they have offices all over the world, right? And I understand that each of those traders with their own lives and their own P&L, might have some different motives and styles and different things, but a lot of places have offices in New York, London, Singapore, Tokyo, blah, blah, blah. And they have a strategy that those traders are kind of deploying and things like that. So I don't think anymore it's such a huge difference. I think that for human reasons and the fact that this is, at least what we're talking about is US markets, that there's a ton of participation from people in the US who have the most skin in the game with US markets. Therefore, they also sleep on a regular human business hour schedule, and therefore they trade during a lot of the pit session hours, and a lot of volume and liquidity is enhanced during those times. So it's just kind of like no matter how programmy computer algo this trading world gets, at the end of the day, humans still have to sleep, and you can't get around that. Um, so yeah, I mean, we could talk about that's just a little bit of my take on why RTH matters. I don't think RTH is the only thing that matters, though. Don't get that wrong. When I choose to do market profiles for US indices, I only use RTH hours, but I have, you know, half a dozen more charts beyond those profiles that also use full 24-hour sessions. So I'm not saying that those sessions aren't important. I'm just answering your question of why RTH has this significance it does. Again, I think everyone agrees on when the open is. I think that in terms of, to stick with your time frame, Eastern times, I think 4 p.m. Eastern is the close, period. Some people use 4:15. I think those are the only two correct answers as to when the close is. I think by and large, it's got to be 4. Some people like to give it to 4:15. I really hate the 4:15 thing personally because it screws up the perfect half-hour segments of the TPO periods, and you end up with this 15 minutes, which counts towards an entire TPO period. I don't believe in that. So yeah, that's my take on that. Good questions. Graham says, I'm comparing my DMIs with your Twitter DMIs, and I notice you place bullish, bearish, neutral zones. I assume the bullish and bearish zones seem to be composite value high, value low, and volume value areas. Where do you get your neutral zones from? Well, you would assume incorrectly in terms of where the bullish and bearish zones come from. Sometimes they might come from a composite, but they come from all kinds of things. I'm not going to share publicly where my levels come from because it's not the same thing all the time. I have a very discretionary framework-based approach that my students know where the levels come from, but it's not something. The DMI is, I mean, sure, like people appreciate it and some people like it and stuff like that. But you know what the DMI is, guys? Like, wake up. It's marketing. The DMI is me saying, we have a desk, we have education you can purchase. Let me prove to you day in and day out that we're good at what we do. That's what the DMI is. You know, walk the walk instead of just talking the talk like everybody else. But in general, you know, maybe we could answer this in a different way. Bullish and bearish zones are ones that are ranked high in terms of hierarchy and importance for those levels. A neutral zone is a lesser level that I'm not generating my directional bias from, but it's important enough of a level to make it on the DMI. It's not important enough of a level to tell me I want to be long based on it. Right? That's what the colors are for versus the neutral stuff. Why is my phone blowing up? Nothing important. Hussein says, hello, Merritt. Love what you do and share. Can you talk to us about how you use cumulative delta? Sure. You know, we could talk for maybe a week, right? We could do a full day, like an 8-hour day, and I could teach you about delta, right? So it's going to be limited in terms of what we teach here, but nothing that we would ever get to truly separates from the simple concept I'm about to tell you in terms of how I use delta. So I believe that delta gives an indication of strength of one side of the tape, right? So let's draw. So if we have price in the upper pane and, you know, cumulative delta in the lower pane, I believe in general that it's looking inside the bars, right? So if we just take this like very simply to have one price bar candle in this case, what did the delta do during that price bar? Well, if this buying was really strong, the delta is going to be pressing upwards with it, right? If the buying was not so strong on, let's say, the next bar higher, and delta looks like a doji, right? guess what? There's not as much aggressive buying behind that bar. How you want to extrapolate that ultimately and apply meaning to it can go down a lot of different rabbit holes. But the fact is that price can move up, you know, with trade being done. Price can move without any trade being done, right? Until maybe one lot fires off, then it moves. But the bid and the ask could just move, and nobody could trade. And then a one lot goes off, and then boom, we just essentially gapped, we moved a lot. So price can move just because participants move without trade. Price can move most commonly, in my opinion, for normal markets, typically with aggressive participation. So I like to read how aggressive is the participation via the delta. So looking more at rotations now instead of bars, if you have an up move, well, okay, it's accompanied by strong buying, right? If you have, the same up move with really limited delta participation of buyers, aggressive buyers, well, guess what? This up move is not as strong as the prior example. There's a lot of other stuff we can get into, but you want to ask yourself, if we look inside the bars, inside of a rotation, is the participant behind that move, in this case of an up move, you want to ask how strong the buyers are. Are they strong or are they not, right? That's what we want to do. Very simple. Pack says, Merritt, so I've been having really great results and very consistent from P&L perspective over the last 6 months. However, I still find myself making a lot of amateur mental errors like overtrading, tilt, focusing on P&L, you name it. Typically, a lot of that comes from the focus on P&L, by the way. I feel like I've gotten a taste of CPT, but mentally I'm still not there yet. How do you know you've arrived from novice to intermediate to pro? Is it just based on the P&L, or do you still make these mental errors as a pro? It's a great question. And it's something that, we all ask ourselves along the way. But it takes having been there and gone through it to kind of be able to look back and know, which is why you're here. So you've come to a good place. First of all, the human discretionary trader will never fully remove mistakes and errors. Just last week on the intensive, I'm going to try to remember. You guys can help me in the chat, please. I know I had one like literal execution error where instead of scaling, I accidentally flattened, and it was just kind of a scalp into an area. So I said, well, hands off. That's it. I made a mistake. But you guys saw last week, I made, trades that were debatable. One or two trades that were just not good. And, I give myself a lot of like discretionary freedom at this stage of my trading. But if I were adhering to more of a very strict process-driven approach, like I teach everyone to do as they're coming up the curve, then I would have made mental errors, process mistakes, things like that, right? So point number one is that it never goes away. But point 1A, much to, I think, much differently than what a lot of well-respected people on Twitter would have you believe, you don't, the CPT, the pro trader, whatever label you want to put on it, the intermediate trader does not go around day after day doing a bunch of boneheaded, stupid stuff. They don't. I know a lot of them, and they don't. This whole idea that like, hey, we all just constantly do stupid stuff and make horrible decisions here, I don't buy that. I don't. Just look at any and feel free to disagree here, guys, if you've got good examples, but like, look at any discipline and the people who rise to the top. Do they do a bunch of really stupid, bad stuff all the time? And no, they don't. Do they make mistakes? Yes, they do, right? Even the greatest chess players will make what's called a blunder from time to time, right? Even the best athletes will, you can't expect perfection from athletes, because now you're talking about literal physics and sometimes random elements, right? Of weather or the grass slipping out from under their feet, based on the structure of that grass, like there's random elements involved, and you can't expect perfection in physicality. But to a high degree, them doing stupid, boneheaded stuff is extremely limited. You may not agree with the basketball player, hey, shouldn't have taken that shot, but that's really, really up for debate, I think, a lot of times. And you're going to have people with differing opinions on that. So anyways, as traders, once you have a process and you understand what your job is and the risk that you're supposed to take and the playbook and trades that you're supposed to be risk on for, you need to get good, right? You need to really get good at doing that. So that's point 1A. I would like to specifically comment on you talking about a lot of amateur mental errors, overtrading, tilt, and then focusing on P&L. I think a lot of overtrading and tilt comes from the focus on P&L. Tilt signifies that you've experienced cognitive dissonance, you're frustrated, and then there's almost a screw it mentality, right? We have to back all the way up, not to the actions that you take when you're on tilt. Those are essentially worthless. We have to back up and figure out what puts you on tilt, right? That's the meaningful information here. So if you can dive into that and start to learn your triggers better, right? What are the sequence of events or things that tend to very commonly put you into that bad trading state? We don't care about the bad trading. We care about what leads to that. Are there things that you can monitor for, be more self-aware of, learn about yourself, learn about your trading, to then the only thing that mental framework or trader psychology, to me, theoretically, philosophically, comes down to is whether or not you can remain objective. Please, someone name to me a trader psychology problem that doesn't relate to losing the ability to remain objective. That's what it's all about. It's actually really, really simple in terms of the goal of all this complicated stuff we could talk about with trader psychology. That's the goal. You have to be able to continue to see what is, right, from a neutral, objective point of view. And then you have to be able to process that information at the hard right edge relative to a process for making decisions within the frameworks that you create. That's a trading methodology. So you're still going to make mistakes, but you should have a very high degree of success rate in making good decisions. In terms of the tilt, a lot of times that comes from focusing on P&L. Now, all of a sudden, your motivations, that's another big word that I like to use for putting on the next trade or the next scratch out or the next size that you choose to put on. The motivation for that decision is no longer market generated information through your process. It's here's what happened a moment ago. Here's what my P&L is. I want to change that. I'm motivated to change that. So therefore you make what looks like over trading, tilt, stupid things. That's what ends up happening. So is it a good sign you've arrived if you've put on months of profit, or is it more of a mental thing? No, I mean, at the end of the day, we're playing a mathematical results-based game, right? Like the combination of your win percent and the ratio of your average winner to your average loser, the combination of those three variables essentially is what determines profitability. So putting up risk-adjusted profitability, just because you're up over the past 3 months, it could be a fluke if it was like one or two big winners and that's not the design of the system and the rest of it was garbage. And you drew down, you're up $10,000, but you drew down $20,000 before you got up $10,000. That's not risk adjusted performance. So if your P&L that you're up is a healthy multiple of your maximum drawdown, if your stats are in a healthy place for you and what you're trying to do, then yes, you have arrived at a certain level. I think lastly, and then we'll wrap up and go to another question. I think that a lot of traders have arrived and they don't realize that they've arrived. I constantly have to tell students that you actually are into CPT territory here. And that's a beautiful thing to have to try to shake someone, wake them up and tell them, because they just have their nose down. They're working really hard. They're grinding process goals day after day. They understand what they're trying to do and they're hard on themselves. And they're still saying, you need to do this better. You need to do that better. And then you look up in 3 months and I tap you on the shoulder and say, welcome to the desk. So that's, give yourself a lot of credit there for good results that you're putting up. Definitely focus on the tilt and where it comes from. And then whether or not you have to implement strict rules to prevent that, whether or not you have to implement mandatory breaks following the typical trigger sequences, right? Maybe it's 3 losses in a row sends you on a death spiral. Well, if you have 3 losses in a row, you have to take a mandatory 15-minute break, stuff like that. Until you can actually continue to grow and become better, you have to put in little bumper lanes to help yourself. Andrea says, hi, Merritt. I find it hard to only take the playbook trades, the good playbook trades. I try labeling the bad gut feels to see the cost. They are just at the edge of profitable at 15% win rate. Well, they must have a good risk reward. Your story about the monster in your podcast has helped a lot. Any words from you on the subject might help. I just can't seem to get over this obstacle on my own. Look, I mean, here's one approach. You want to continue to be an amateur, or do you really want to get good at this, right? Do you want to go on a diet and stop eating the ice cream? You're going to have to do that. At a certain point, I think sometimes good advice is to tell people to just buck up, right? Do you really want this? Well, then get serious enough to do what you have to do. That's just one approach, right? That's the harsh Merritt approach. And sometimes that's very helpful to people. One thing that I've tapped into in the past is the concept, and Dr. Steenbarger helped me personally with this, was tapping into core values. And so for me, integrity was one. And I think to maintain and feel good about myself, right, as a motivation, I wanted to trade with integrity. And so I could tap into that to avoid doing a lot of what I straight up knew was disrespectful to myself and disrespectful to my career. And, just against everything that I was working for. Tapping into some core value can be a strong, here's that word again, motivator to harsh Merritt, buck up and do the right things, right? It's nice that your gut feel trades are at the edge of profitable. Let's be honest about that. So if they're not just like a massive drain on your P&L, that's what I often see. I often see people who have a profitable, or they're profitable trading NADRO, for example, but then they have all this other crap, right? Your gut feel trades or your other crap. And their other crap totally wrecks all what would have otherwise been profitable P&L with the good NADRO trading. So at least for you, it sounds like it's not a massive drag on your trading if they're at the edge of profitable. So anyways, there's about 3 different things for you to consider with that issue. I'm a NADRO student, says Paulo, and found it hard to find an entry on the ES today. Where were the opportunities you missed? Well, first we would have to dive into your prep, right? Where could you see opportunity? Sounds like you're talking about accessing ideas, but before we can talk about accessing ideas as a NADRO trader, you have to tell me what the read was and whatnot. I liked the long idea um, early. We had, imbalance, which gave a little pullback, which was micro on the monthly, but certainly acceptable in terms of a shift back into that old big CVA that I ended up using towards the tail end of the intensive from June 13th. And that's hopping on board a narrative of, again, same concept, traversing value from last week, working towards some of these quarterly, yearly places that we can revert to. But then the order flow fell apart. So for me, it was very short lived. I just took essentially one rotation up into the +2 today, and that's all I did. Yeah. So again, we have to get a lot more specific before I can give you feedback on accessing your ideas. It depends on what your ideas were and all that. Oh, what time is it? 12:58. Let's do one more question. So I'm going to go through and pick out a good one. I don't know, guys. They're all good. I'm having trouble picking one. So I'm just going to take the next one that was in order. So Michael, I find that I struggle with when to merge or split a composite. So those are two very different things. So you're having trouble with both. Sometimes on the first look, there's a lot of overlap. Any suggestions? Nothing that's not in the course, my man. Value overlap is the most important. Put them, if you're very confused, if it's not a straightforward merge, let's say there's some value overlap, things like that, take that second day or that third day, the one that you're considering merging, and really split it out into its letters blocks own column is what Sierra calls it, and read the story of how that day unfolded, right? If it was a day where there was a lot of technical value, right, you were concerned because the value was kind of higher, but really the main story of that day was we went up, we failed and fell back into prior value or the current CVA, and then kind of retested it and then pushed further into it. The main story of that day was a small attempt to break from balance and a reversion. And what ended up happening on the reversion is most important. So sometimes simply breaking them up into the individual ABCD and looking at how that story unfolded can be that final perfect tiebreaker, I think, in terms of determining a merge or no merge decision. Splits should be really easy. Splits are just, look, we've got 2 or 3 main distributions and the value area is just averaging all that out. That's not what we use, how we use value. So, split appropriately so that you get, as we teach, the appropriate measure of value relative to some form of balance, not just some average of value relative to some form of balance and imbalance and balance and imbalance and balance. That's the point. That's why we make custom profiles rather than just regular time-based stuff or big, large composites as other people do. Our way is better. Okay, that's it, guys. Good crowd today. Hope you had a good time. Hope you learned something. Thanks for the great questions as always. Sorry for the ones we didn't get to. If you show up next week, start the question, say, hey, you didn't get to this last week, and I'll try to get to it first or make sure that we certainly answer it. Bye, guys. See y'all.